Okay, if we look at number 16 next, it reads, Summit offers its services to individuals desiring to improve their personal image after the accounts have been adjusted, which is the end of the fiscal year. The following balances were taken from the ledger. Do the closing entry. All right, so we know that our first entry is to always close out our revenue. So we debit the revenue account and we credit all of the expenses. The normal balance for an expense is a debit, so we got to credit them to zero amount. Revenues has a normal balance of a credit, so we have to debit it. And then the net of the revenues and the expenses is 16.2. So the question is, if we are debiting retained earnings for 16.2, that would tell you we had a net loss. All right, and then the last one that we have to do, provided the entries that they gave us, is the dividends. So, or the accounts they gave us is the dividends. So we close out the dividends account for $5,000, and we put that to the retained earnings of $5,000. So in this case, it's pretty clear to say our retained earnings after the loss of 16.2 and after the dividends of 5,000, we will be reducing our retained earnings from the beginning of the year with a total of 16.2 plus 5,000. So it's going to be going down quite a bit. Number 17, it says, which of the following accounts will usually appear in the post-closing trial balance? Post-closing, so after we do our closing entries, well, the only thing that's left is our balance sheet, right? Assets, liabilities, and owner's equity. Well, in this case, the only ones that are left would be the accounts payable, the accumulated depreciation, cash, common stock, not E, F, or G, but H, office equipment, not I, but we would include J and K, salaries payable and supplies. Only balance sheet accounts. And then number 18, prepare a corrected post-closing trial balance. Well, if you look at that exercise, it's a mess. Not only does the two columns not balance, but we got debits in the credit column, we got credits that should be in the debit column, and all over. So correcting it, it should look like this. It should look like a total of $526,250 for our totals, $526,250. When you correct it, you'll put the right amounts in the debit column and the right amounts in the credit column, and it should balance just fine. And then the last problem we're going to look at is problem 1A. And it asks for you to read this. You know, it gives you that same spreadsheet with the 6 columns, the first 2 unadjusted, the next 2 the adjustments, and the last 2 is the adjusted. And what they're telling you is, number 1, prepare an income statement. Well, the income statement, first your revenues, right? Then your expenses. Again, not too concerned about the order because we're going to ultimately get to the same net income. Cengage likes it in descending order. So with miscellaneous always being last, there's your 137.4 net income, which you will see. Number 2, it says prepare a statement of stockholders' equity. During the year, common stock of 25,000 was issued. So we show our beginning of 50, that comes right from the problem, our retained earnings right from the problem. Now we add the 25 that was in the reading. We put the 137.4 from our income. It shows that we did a $10,000 dividend. Comes right from that spreadsheet. It's a reduction. So our new stockholders' equity is $330,500. Step 3, it says, do the balance sheet. $330,500. Put that right in there, right off of number 2. Our $75,000 and the $255,500. Again, looking at the last 2 columns of that spreadsheet, the top half, we list all of our assets. We list all of our liabilities. This came from problem step 2, and we have a balance sheet that balances $352,200. based upon the end of the period spreadsheet, journalize the closing entries. So again, our closing entries. The first one would be looking at what is our revenue. Okay, we can grab that from right up here, 372, 1800, and 1100. So close out our revenue accounts, close out all of our expense accounts, and the ending balance goes into the 137.4. So again, put your revenue in there, put all your expenses in there, and then it doesn't balance yet. That journal entry won't balance until you put in this 137.4. However, you know that number's right because that's what your net income is. Okay, so 137.4, and then the second journal entry, as we saw in the reading, debit retained earnings, credit the dividends, and you close it out. In step 5, prepare a post-closing trial balance. Post-closing means everything is done, it's all closed, except for our permanent accounts, which is just our balance sheet. So assets, liabilities, and then our equity accounts. And if you notice, these equity accounts are different than what's on that spreadsheet because we've closed now our revenues and our expenses into retained earnings. So you'll notice that that is a different number than what's on the spreadsheet. This is a great problem to review. So first it makes you lay out an income statement, a statement of retained earnings, a balance sheet. Those are the three that we always say in that order. And then closing entries. And then what does that post-closing trial balance look like? That basically wraps up Chapter 4.